a busy week for Donald Trump with a budget showdown that could shut down the government, tax reform announcement, possible new health care bill. Joining us right now to take a closer look at how the markets could react to all of this, Heather Zumarraga, SunAmerica Funds Vice President. Good morning, Heather.
Good morning, Nicole.
Well, we saw the markets gain last week after 2 weeks of losses. This morning, Dow futures up nearly 2%. There is some optimism on tax cuts. Steve Mnuchin, but has the market gotten ahead of itself looking at these plans?
I think that earnings have justified the run this far. We're up. Earnings are expected to beat 11% and 9% revenue growth year over year. So far, 76% of companies have beat their earnings expectations, even though the bar may have been set very low. So the question is, what's the next catalyst? You're right, markets gotten ahead of themselves. Perhaps if we don't get some details of President Trump's proposed tax plan this Wednesday, and I know that we have the debt ceiling looming this Saturday, they must come up with a compromise before Friday on if we're going to increase the debt ceiling yet again. Oh my God, here we go again. It's a nightmare that we had in 2013. And we may see that happen, but markets really shrugged their shoulders over the past 18 times that we've shut down the government since 1976. The markets have fared modestly okay.
Heather, can you explain this to me, how you're saying corporate earnings are so strong, yet we're expecting to see a GDP print for the first quarter of about 1%. How do you negotiate that?
Yeah, so markets are up on the backs of it's all about expectations. The bar has been set very, very low, and although the economy has thrived and done better since the recession, we've picked up some steam. We're still lacking in productivity. We have automation. Robots are replacing our jobs, right? The consumer is still weak, which accounts for 2/3 of GDP. And although President Trump and Steve Mnuchin have given optimistic results saying that GDP may be above 3%, growth is really anemic, chugging along 2%, less than 2% growth. Some expectations are below 1% for first quarter GDP on Friday when that announces. So we need to see an uptick in growth. Not just, you also have the 10-year Treasury, which is at 2.3%.
Right.
I think that heads back below 2 before you get above 3. That we need an uptick in consumer confidence.
And that's a big point about the bonds.
Growth.
That's a big point right there. Heather Zumarraga, SunAmerica Funds Vice President, thanks for joining us this morning.
Thank you.